Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 unanimous strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and TGI Friday. Today we're taking a look at 3 stocks that have all buy ratings from Wall Street analysts and price targets that would imply some double-digit upside potential. We found today's stocks using the Tip Ranks stock screener. Found right underneath the screener's menu, here I put in a few different filters, of course a strong buy analyst consensus, double-digit upside potential, and I also wanted an outperform rating on the Tip Ranks Smart Score. That gave us our list of companies down below. So today we're going to take a look at these companies, what it is that they do, and of course what those Wall Street analysts are predicting for the stock's future. You can try the stock screener for yourself right on the Tip Ranks website or on the Tip Ranks mobile app, which you can download using the links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into these unanimous strong buy stocks. First up, we're looking at API Group. They trade under the ticker APG, currently priced at $35 per share. Their stock has climbed 53% in the past year, and in the last 3 months is up 14.5%. They do score an 8 out of 10 on the Tip Ranks Smart Score. API Group is a global provider of safety, specialty, and industrial services, focusing on fire protection, security systems, and infrastructure services. They offer installation, maintenance, and inspection of fire alarms, sprinklers, and suppression systems, as well as HVAC, electrical, and mechanical services for commercial, industrial, and residential clients. With a network of over 200 locations, primarily in North America and Europe, API Group serves a diverse range of industries. Emphasizing safety, compliance, and operational efficiency. At the end of July, they did come out with both an earnings and revenue beat for their latest quarter, plus plans to target $10 billion in revenue by 2028. They achieved record results in their Q2, with net revenues increasing 15% to $2 billion. They also recorded a backlog of over $4 billion for the first time in the company's history and completed 6 acquisitions. On top of that, they saw their adjusted EBITDA increase over 17%. Following that strong quarterly report, we did hear from an analyst at William Blair. They said that the company's Fire and Life Safety segment experienced a notable organic growth of 5.6%, surpassing expectations. Moreover, their EBITDA margins improved by 30 basis points, and that, coupled with the company's strong performance, contributed to the raised full-year EBITDA guidance. The positive outlook for the latter half of the year further supports the buy rating. Of course, we know the stock is a unanimous strong buy, and that is based on 10 current analyst ratings. And the average price target of $40.30 implies an upside potential just shy of 15%. Looking at those ratings down below, quite a few analysts increasing their price targets following that earnings report, ranging from an upside of 5% all the way to nearly 20%. For our second stock, we're taking a look at ITT Inc. They trade under the ticker ITT, currently priced at $165. In the past year, the stock has climbed 24%, and in the last 3 months is up 9.5%. They do score a 10 out of 10 on the Tip Ranks Smart Score. ITT is a manufacturer of highly engineered critical components and customized technology solutions, used in the aerospace, defense, industrial, and transportation sectors. They produce pumps, valves, connectors, and braking systems for applications in water management, energy, and motion control. ITT operates globally with a focus on innovation and sustainability, delivering products that enhance performance and reliability in demanding environments. On July 31st, they reported a Q2 earnings and revenue beat, along with record orders and revenue growth. They delivered $1 billion in orders, up 16%, and generated record quarterly revenue of more than $970 million, up 7% total. Their operating income grew more than twice the organic sales growth rate, and the company also saw free cash flow grow to $214 million and repurchased $500 million worth of shares. With that, the company increased their full-year earnings per share outlook to $6.45. And following a strong quarterly report, we're going to hear from Wall Street analysts. Several weighed in, increasing their price targets on the stock. A 5-star analyst from D.A. Davidson said that the company's overall execution remains sound as it continues to deliver market outgrowth via share gains and healthy overall price capture. Another 5-star analyst from KeyBank said that they walked away impressed by the order strength across the business, which should provide increased visibility into 2026. All in, the firm continues to see ITT's positive earnings trajectory compounded by constructive capital allocation. With 9 current analyst ratings, the ITT stock comes in as a unanimous strong buy. The average price target is $187, implying an upside potential just shy of 13%. Once again, we have quite a few analysts bumping up their price targets following that earnings report, ranging from an upside of 2.5% back in May to a more recent price target with an upside of nearly 22%. If you've made it all the way to our third stock today, then this is a reminder to make sure you've hit that thumbs up button. Third on the list is Advanced Drainage Systems. They trade under the ticker WMS, currently priced at $138. They are in the red this past year, down about 6%, but have been rebounding lately and are up 14% in the last 3 months. They do score a 10 out of 10 on the TipRank Smart Score. Advanced Drainage Systems, or ADS, is a leading manufacturer of water management solutions, specializing in high-performance thermoplastic corrugated pipe and related products for stormwater and on-site septic wastewater management. They serve residential, commercial, agricultural, and infrastructure markets with sustainable drainage solutions and are a major recycler of plastic. ADS's products, like their N12 pipe, are designed to address environmental challenges, ensuring effective water management across diverse applications. ADS just reported their latest quarterly results last week on August 7th, and we have yet another earnings and revenue beat. They delivered a 33.5% adjusted EBITDA margin despite a challenging market environment, which is among the highest in the company's history. Overall revenue increased by 2% to $830 million, and the company saw strong free cash flow of $222 million compared to $126 million in the prior year. Earlier this week, on Monday, an analyst from RBC Capital initiated coverage on the stock with a buy, saying that they view the company as a highly profitable stormwater management leader. Stormwater management is a growing and underappreciated secular growth story in water infrastructure, and ADS is one of the few pure plays addressing it at scale with a differentiated model. The stock's unanimous strong buy rating is based on 8 current analysts, and the average price target of $161 implies an upside potential of 16.5%. Looking at those ratings down below, they range from an upside of 13% all the way up to 20%. So that is a quick look at 3 stocks, all rated unanimous strong buys from Wall Street analysts. Let me know your thoughts on these companies and which one sticks out the most to you. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you guys so much for watching. Have a wonderful weekend, and I'll see you back here next time.